Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario where we are looking for continuation to the upside in wave C or 3 with a minimum target being 65.6k. In this scenario, we then have a finished 3-wave structure to the downside in a wave 2 or B, touching the 0.382 Fibonacci taken from the low to the high of wave 1 or A, which is a minimum target for a wave 2 or B. The 382, however, is a bit more common for a wave B than a wave 2. So if you do move to the upside, arguably the probabilities are a bit higher for wave C compared to wave 3. Now, if I zoom in, you can also see that this move to the downside ended just after the 0.382 Fib time, which is the vertical line that you see on my chart, taken also from the start to the end of wave 1 or A to compare this move up in time with the move down in time. You do like to see a wave 2 or B ending after at least the 0.382 which happened. So theoretically, this move to the downside hit a minimum retracement target, and the move to the downside also hit the minimum time target. So from a theoretical standpoint, there's absolutely a possibility to count this then as the end of a wave 2 or B. However, that would then mean that this move to the upside has to be an impulsive structure, because a wave C or a wave 3 is an impulse, right? You want to count a 5-wave impulsive structure to the upside. So if we then take a look at this move to the upside here, it's actually really difficult to count this as a high probability impulsive structure to the upside. When we think about impulsive structures, right, there's 3 scenarios. You have an impulse, 1, 2, 3, 4, 5, the standard, right? Then you have a diagonal, 1, 2, 3, 4, 5. And a multi 1, 2, 1, 2, 1, 2, and then liftoff. Now clearly this is not a diagonal. If we count this as a normal impulsive structure, 1, 2, 3, 4, 5, then the highest amount of volume is in your wave 5, which is very rare, as most commonly the highest amount of volume is in a wave 3, but that is not the case. We cannot count this as a wave 1, 2, 1, 2, 3, 4, 5, 4, 5, just to get the highest volume in 3. Reason is that your wave 4 retraced too deep, invalidating a wave 4, which then leaves us with a multi 1, 2 of some sort, where we then have to count this somehow as a wave 1 over here, and this also has to be a wave 1 to then create either a triple or double 1, 2, right? You need somehow 1, 2 somewhere here, and then this is another 1, 2 for then continuation to the upside. But as you can imagine, it doesn't look very pretty. Now the invalidation for that scenario is price pretty much taking out this low here at 58.9k, as then you change the market structure. Now this does of course increase the probabilities that the move towards the upside here is a corrective structure, not an impulsive structure. Now this in turn increases the probabilities of the second scenario I have in my on my chart here, where we are looking for an extended wave B or 2. Now in this scenario, the one that I have on my chart, we're looking for a flat, being a 3-wave A, 3-wave B, and then a 5-wave C. Here we then finish wave B or 2 lower, preferably inside the 05786 target area, 56.6k, 54.2k. If we then look at the internal structure, which is then counted as a flat, 3-wave A, 3-wave B, 5-wave C. Most common target for B here on the chart, 61.4, 61.8. We just missed out on hitting it, but the 105, which I removed, is a uncommon / rare target, which we did hit. And I mean, we're only a few dollars away from the 1.236. So no problem there. And if price does move up to maybe create some sort of a WX and then a Y double zigzag, we do have the daily naked point of control still above us, 61.7, which is very attractive resistance to then test the resistance and move to the downside in a wave C, an impulse to the downside, which can be scary, preferably fast, and possibly would work well with the news that we have later. So something to keep in mind. If price does move up and touch the 1.618 here at 62.6k, the probabilities for this scenario will significantly decline, increasing probabilities of a continuation to the upside. Now, when we look at the 4-hour time frame and this volume profile, it is very, very nicely respected. It's a great volume profile so far. Resistance over here, support, resistance, support, deviation, back to support, and now we are back at the value area high, testing it as resistance. The point of control right below us here at about 59.5k, value area low 55.9k, right? And that is in confluence with what we see over here, that green box for a potential B or 2. If you then go to the 15-minute time frame, so we're zooming into the more local structure, right? Then here, your most bearish scenario, which would mean that your high here is in, and the probabilities increase to move below 54, what's the low here? 57.4k, right? We would need to look for a double 1-2. Because if we look for a flat, bearish scenario in the 1 hour, and a wave C to the downside, we need to count an impulse to the downside. And in this scenario, we would need to count a double 1-2. 1-2 in blue, 1-2 in white over here. And then you're going to be looking for maybe a few more 1-2s, but eventually a big move towards the downside in a wave 3, targeting the lows that you have over there. Now, what we do have to look for in a double 1-2 is the Elliott wave degrees matching time and price. So your highest degree is a 1-2 in blue, 3, 4, 5 in blue. And then inside your wave 3, you have the lower degree white count, 1, 2, 3, 4, 5. Now, preferably, your lower degree Elliott wave structure is a bit shorter in time and price, or maybe similar in time and price. Now, your second wave 1 here is twice the length of your first wave 1 in price. But more importantly, your second wave 2 here is 8 times longer than your first wave 2, which really lowers the probabilities for this to be a double 1-2. But we cannot count another impulsive structure down here. A single impulse is already invalidated. 1, 2, 3, 4, 5. Wave 4 retraced too high. And if we want to count diagonal structures in here, then it's going to be expanding diagonal structures. Or this is only wave 1, 2, we still need 3, 4, 5. So it is too early to talk about diagonals because you want a wave 4 to finish first, which isn't the case. So therefore, the probabilities increase on a 15-minute time frame for a 3-wave zigzag to the downside, which automatically increases the probabilities to still take out this high that we made over here. Which is of course interesting because we do still have that daily naked point of control at 61.7 as well. Important resistance to the upside, right? Now a zigzag by itself can easily be part of a bigger structure. A WXY, a flat, a double zigzag, right? So it's not that, oh, we have an ABC and up we go impulsive and ta-da, right? We can easily continue ranging for the day here. And then as the news approaches this afternoon and tonight, get that volatility that we are looking for. Make sure you trade safe, right? So that is something that you have to keep in mind with regards to the 15-minute time frame. Now, what's also important is, of course, CVD divergences. We do have here active bearish CVD divergences. We also have bullish CVD divergences. So these are countering one another. If you don't have too much experience with CVD, it's best to not use it at the moment and just wait for price to pick a side. Either have the bearish or the bullish one invalidated. Now the target for the bullish CVD is this high here at about 60.7k, and the bears need to move price to the downside below 59.6k. I already mentioned the news, 2:30 p.m. That's where things might start, right? Potential volatility. I will be live at that time on YouTube. So 2:30 p.m. Central European time. But then tonight, 8 p.m. and 8:30 p.m. And I will try to be live at that time as well. I do have an appointment, I noticed, but let's see what I can do in order to be live. So we do have some news here. Make sure you trade safe around that hour. And if we then look at the probabilities, right, on the different time frames, and on the 15-minute time frame, the probabilities at the moment are highest. that this is a three-wave structure to the downside and not a double 1-2 very, very locally. Based on the explanation, based on the analysis, right? So a zigzag down from the high. Be mindful though of bigger corrective structures over here, but the probability is higher at the moment to still take out that high. And then bearish would be a three-wave or a wave 3 to the downside, being a 1-2, 1-2, couple of 1-2s, and then get a very big 3 to the downside without taking the high. Now on the 1 hour time frame, at the moment, based on the structure up here, the probabilities would be a bit higher for an extended wave 2 or B, so a longer sideways corrective structure. When and on the number 2 spot we have the multi 1-2, meaning you then have like a finished 1-2 here, and then in this structure to the upside you have another like multi 1-2, like 1-2, 1-2 up. Of course, preferably for the bears, you do change market structure because you can't invalidate the 1-2, but it's not a great impulsive structure. And something that crosses my mind when I think about the probabilities here as well is that if price can continue ranging, then possibly with the news, one swipes the high, hit the daily naked point of control, and then look for weakness, of course, right? I don't have any limits. I'm a market entry trader. I observe the reaction. But if we then get that weakness, get that volatility, get a move down, I'm definitely interested in looking for support to the downside for that bigger extended wave 2B if we get it, right? So what we have to be aware of as I write here is that on the 1 hour, the current high over here is made on the highest amount of volume as explained in the analysis. Now, having that volume in the high is rare for a wave 5, making it difficult to count the move from 57.4K up as an impulse here, as a finished impulse, 1, 2, 3, 4, 5. Therefore, only a multi 1-2 would work, which of course is very bullish. However, if price is changing market structure, taking out the low, the probabilities go down. And at the moment, the double 1-2 doesn't look very chic, right? It's good. We have to keep it in mind. We know about the scenario. We know what we like to see to reduce probabilities for that scenario, meaning taking out the low here. But at least we have to be aware of it, right? So the volume in the high that we have over here, right, does make one think of a corrective structure to the upside that leads to a bigger wave B or 2. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.